I lost $2 million in the crypto market before I figured out what I'm about to hand to you in the next 40 minutes. The market didn't take it from me because I was unlucky. I lost time and money because nobody shared the blueprint with me when I had $400 and a laptop. Today, I'm going to be covering 8 things: mindset, mechanics, strategy, and the long-term game that holds it all together. Making sure that you become profitable. Stay until the end. If you are serious enough to apply this, it will change how you trade and live your life permanently. Number 1, the timeline truth. The first thing I wish someone told me on day 1 is this: you are not going to master trading in the first 12 months. Now, this doesn't mean you won't make money, but I want to make sure there's real expectations here. To learn the real skill of how to manage, how to grow your money, this takes time, but it's a skill that you'll have for the rest of your life. Which means if you need to make money and you want to learn the skill, you need to play this smartly. Now, I know this is not what you came here to hear, but if you don't understand this now, you're either going to quit right before you're going to make a breakthrough, or spend a lot more time trying to get to the conclusion. Now, let's speak about when I started trading. I started with $400. I just lost my job. I needed to survive on trading, and I decided to go all in. And the first couple of months was actually quite insane. I ended up growing my account from $400 to $10,000, back to $400, $400 back to $20,000, and all the way back. And this for me was a massive emotional wreckage. And the reason being is I was going for the $1 million. I came into this to make money from day 1. But what I didn't realize is that there are very key fundamentals, not when it just comes to making money, but actually keeping the money. So I would make the money and completely lose it. And that was when I realized that this is a skill and not something that I'm just going to know overnight. So after many times of growing my account and then shrinking my account, I was going into depression because I was filled with guilt of all the money I kept on making and then giving it back. And the crazy thing is, it got to a point where I had no money left that I had to live. My family didn't have money. I never had any backing. And it got to a point where I had to trade for food. Then I had to trade to pay my electricity and then pay my rent. And the crazy thing is, I started getting into trades, taking the money out and spending it. And after a couple of days to a week or 2, I started ticking a few of the boxes off. And then after 4 weeks, I managed to live for the month. And that taught me one of the most powerful skills that I learned today is purpose behind your actual trades. This whole time I was chasing the $1 million, what I didn't realize that trading is like an ATM that hands out money every single day, and the market offers you a certain amount of money. And it's up to you if you need to use that money for something in your life, or you're going to keep dreaming for the big one. And that for me was like, wow, step by step, I will build my trading journey. Now, it wasn't just my skills that managed to make me live on it. I had a community of a couple of traders, and I'm speaking around 3 to 4 friends that I made along the journey. We sat until every single night and I charted with these guys. These guys easily had 4 to 6 years more trading years than me. So this helped me with setups. It helped me copy at times to learn, but as well as making money as I really needed to make cash. And then it started to set my expectations right, that this is going to take me some time to learn. Therefore, what's the best way that I can learn and make money at the same time? And after many months of trading with these guys and just paying off my bills one by one, I hit a massive breakthrough around 18 months later, where it got to a point where I didn't need any information from anyone. I could read a chart, I understood risk to reward, I understood how to mentally get through losses and how to make sure I can defend my account when the market is trying to take money. Because if you wake up tomorrow and you have money, you have another life. And it made me realize that the focus on making money is not the major priority, is keeping lives to make sure that you survive and you're there the next day is the #1 skill when it comes to trading. And that came from me being in the actual game. And you want to know what the crazy thing is the same techniques that I learned in the first 4 weeks of trading when it comes to charting is the exact same technique I still use today. I realized that charting and knowing when to buy and sell is actually very easy. The hard part was the emotions and holding myself together when the market is taking money from me and giving me money, because that would change the way I would do things. When I'm making money, I was getting greedy and I wanted wanted more. When I was losing money, I was getting angry with the markets and I just wanted to get my money back. Therefore, I was not thinking clearly, I was just reacting to the markets. And that's when I learned that the market can have control over you versus you being in control of yourself over the market. So the important thing to understand in the first 12 months is that window of time you have is actually for you to develop the skill. And if you're in a place where you need to make money at the same time, these come with different time frames and different strategies. Because realistically, when it comes to you making money, this takes time to develop. But if you want to play the game smart, make sure you're surrounded with those who are making money whilst you learn, and you could possibly end up having both. True mastery in this market takes 12 to 24 months of consistent exposure. Start on TradingView, where every decision is based on structure and data. Start journaling from day one. Remember, you need to understand your data to master yourself. So by mastering your data, you can pick up on repetition of mistakes, repetition of successes, and ultimately you can build yourself a structure that's designed on your strengths and weaknesses. Find traders that go live on their charts. And when they're actually making decisions on trades, they're speaking out loud and explaining it. You're not here to follow a signal group. You're here to get insights, but you're also here to find the recipe that works for you. Once your expectations match the real timeline, you stop measuring the wrong things and you stop quitting at the wrong moment. But recalibrating your mindset is only half of it. The other half is making sure you still have money when the skills arrive. Step number 2, the survival mechanics. Every loss you take in your first 2 years is school fees. Now, we are privileged that when it comes to us choosing how much money are we going to take to learn, you are in charge of that. Not like our schooling systems where you pay a certain amount a year to learn a bunch of things. If you want to learn how to trade, how much money are you going to put on the line to actually learn how to trade? So if you decide, I'm going to use $500 to learn how to trade, and you space out that every time you lose a trade, you lose $2, because the point right now is not to make money, it's to learn the lessons, each loss will cost you $2. But if you decide to put your whole bank account in and you get wiped, that lesson costs you all of the money you had in that time. So you are in charge of how much you are going to pay per lesson. The problem is that traders structure their capital in a way that it runs out before the education is complete. They go all in. One account, full exposure. Why? Because they want results to happen fast. And when that account blows, and it will, they're sitting with nothing left to rebuild with. Now let's go back to when I started my journey. I got invited to a crypto conference. It looked amazing. Month 1, I started making money. What I decided to do, sold my car, closed my business, sold all my tools, and I went all in around $30,000 to $40,000 into the market. Not to know that the project that I invested in was actually a scam. They ended up freezing the accounts and I ended up going to zero. Luckily, like I spoke about earlier in the video, I had $400 in a Binance account. And after that, the journey of me learning to trade took me around 12 to 18 months. And after 18 months, I saw my first $1 million, which gets me to the next point. How much money should I put into the market? I'm here to tell you very straight that you don't have to put a lot of money to make a lot of money into this market. It more comes down to your dedication, you working on your skill, your mindset, and learning how to grow and protect money. Just because you put more money into the market, that doesn't mean you're going to make more money. It actually means that you can lose a lot more money as you are learning. So for me, if you are worth $10,000 today, you can start your journey with $500 and you can turn that into a lot of money. You don't have to put all of your money in. You can decide how much money am I going to learn and how much money am I going to start with. The traders who treat every failure as a step closer to profits are the ones that stick through it and come out on top. But surrounding yourself with distractions and the wrong people is the fastest way to slow that down. A bad mentor shortens the runway, and the wrong environment costs you time that you don't have. Trading alongside people that have already gone down this path cuts your time down significantly. And that is exactly what our community is built for. We have helped dozens of beginners start their journey and actually get profitable in the crypto markets. If you're looking to master your crypto journey, click the link below in the description. And And now let's jump on to the next part. Number 3, the focus filter. So guys, let's face it, the internet is filled with free trading content. And to be honest, that's the big problem with learning, because what we want to do at the end of the day is learn everything. Now, I'm someone that went through that journey. I put every single indicator on my charts. I put RSIs, I put stochastic RSIs, I put moving averages, EMAs, Fibonacci's, Elliott waves, liquidity pools. And you know what it actually created? Me being more confused than ever. What I didn't realize, however, is all you needed is a simple method that helps you with risk to reward and having a really good rule system. And the moment that I simplified the entire process, trading finally became right for me. And you know what the crazy thing about being confused? I had a lot less money too. And the moment that I finally simplified the process, had a good risk to reward system, had a good rule system, I finally started making money. And it taught me the power of simplicity, risk to reward, and rule system. Now let's speak about 3 important pillars that you can start on today. And it's important to master these pillars before you start adding more pillars, because the key here is you actually only need 3 major pillars to get your journey started. And once you are getting comfortable and you have rhythm, then you can slowly start adding pillars to the journey. But rushing it and trying to learn everything in the beginning is just going to set you back and leave you confused. So let's start off with pillar number 1, and this is technical analysis. This for me was one of the simplest ways to understand when to take a trade. And is it a good time to take the trade? Should I long? Should I short? What token should I trade? I tried everything in the beginning. I tried to understand the token, understand the team, understand the tokenomics, and all of these things were just tons of information that never gave me the simple recipe. The simple recipe is what way should I trade this right now? What coin should I trade? And where should I take the trade? So the key thing with technical analysis is to use very simple tools to help you know if you should long the markets or short the markets. Then you need to know, is the trade ready to be taken? So understanding market structure is super important. Is the trade ready to play out? Because what you'll tend to see is when price is ready to actually make a move, it tends to slow down before it makes the big move. And if you track that slowdown and you see which direction it breaks, it gives you a key indication of where the next move is coming, but also it helps you not get shaken out before the actual trade is ready. Then the most important part is you want to use simple tools that help you understand that the trade is worth taking. Sometimes we get into this gambler's mentality, and the gambler's mentality is, I can make $200, but I'm risking $500. You need to make your wins worth a lot more than your losses. So ideally, you want to find a setup that I can put a stop loss over here, and I'm gonna lose $200 or $20. So what you're actually looking for is a very strong win to loss ratio. And this comes down to risk to reward. So it comes down to, where am I gonna put my stop loss? And is the reward worth the loss? The last thing you wanna do is to become a gambler. And a gambler is someone that goes on a 1-to-1 ratio or less. So what does that mean? That means that when you enter a trade and I have $200 where my stop loss is, but my take profit is $200, right? That's red or black. Or what happens if you're risking $200 to make $50? That is not what you want to build as your core fundamentals. What you want is a really strong risk to reward, meaning that one win is worth multiple losses. So instead, you want to use tools to firstly help you identify when the trade is ready, but secondly, when your stop loss is there, you're risking $200, but if the trade plays out, you win $1,000 or you win $600, right? So the key point with this is your risk to reward, you want to a 1 to 3 as a minimum, okay? And a 1 to 5 is like my really sexy trades that I want to get in. And what that basically means is 5 losses equals 1 win. And this is so important because as traders, we think we need to be 10 out of 10 traders. You do not need to be a 10 out of 10 trader. You need a good risk to reward. And if you have a risk to reward of 1 to 5, you need 3 out of 10 trades and you are profitable, which means you need to get it right 30% of the time. Now, sometimes in your journey, maybe in a week, you will get 5, 6, 7, 8 trades winning in a row. And those are massive weeks for you. And sometimes you just get 3, but the 3, you are profitable. So you're building this in your mindset that you don't have to be a 10 out of 10 trader. And what you really got to focus on is using tools that give you a really good risk to reward. Pillar number 2 is a consistent learning source. 1 or 2 people that you follow, you resonate with, you learn from. And again, someone that you're getting information and actually learning the skill from, and someone that you have a good feeling about. Someone that you see is authentic, showing their trades, showing their losses, showing their entire journey, because that's who you want to be sitting with on this journey. Is someone that's showing you the real understanding of trading, that's putting money on the line, because your goal is to sit there and not learn everything from them. Yes, you're going to learn a lot of nuggets, but you're going to learn things they're doing wrong too. And ideally, you are not doing this alone. Someone you can be accountable with and be a part of the journey. And ultimately, their wins and losses are going to teach you a ton of lessons. So the key to this game is to not overwhelm yourself with information. Cut down your team, find one or two that you really resonate, and lock in. Pillar number 3, again, probably the most important for me. This is time in the market. We can all watch a documentary and look at all of that science, but until you are in the field and you are actually in there and you're taking trades and you're drawing lines and you're putting tools, you are never going to really learn the skill. Because as much as we can learn from a book or someone else, this is about you. Every human is different. We have different strengths, different weaknesses, different triggers, and different things that kind of work in our favor. And the more time you spend in the field, the more you get to learn about yourself, right? And the more you learn about yourself, you can build structures that are built for you. You want to be in this ideal world where you understand your limits. You want to understand where to start, where to stop, and really knowing the best strategy for yourself. This can only come from you. Yes, you have your information sources that are out there, but the more time you put in the field, the more you're going to build the actual skill that's going to be there for you your entire lifetime. So let's speak about the sustainability of you being in the field, because again, it's going to take you a couple of months to a year or two to become really good. This means your portfolio size is super important. I want to bring back again, just because you put more money into the market does not mean you're going to make more. My best trades have been from a couple $100s and I've taken them to hundreds of thousands of dollars. I've done $400 to $1 million by myself before, right? So more money does not necessarily mean that, which means don't use all of your ammo. Trade smaller accounts. Now the important thing is don't trade too small that you don't feel it. You want to feel your emotions rumble. When you get stopped out, you want to get that little urge. You don't want to be angry and depressed that you lost everything, but you want to get that urge of like, oh, that one hurts. And when the win comes, you want that celebration and that excitement. So the key is to make sure that it's a small amount, but it still matters a little bit, because that's going to get you to take it very seriously. And the moment that you learn that in the beginning it hurts when you take a loss, or it's exciting when you get a win, you start to learn that emotions don't actually matter, right? The emotions are the ones that kind of distract us from the clear trades that are in front of us. And when you get to that stage of trading, where you start to manage your emotions a lot easier, you'll then learn that trading like a robot is the simplest way. You have a formula. When you jump on, does your formula have 4 ticks? Yes, it does. Take the trade. You know that system built for you. You don't have to worry and stare at the charts the whole night and not sleep. You go to bed, you go out, you go spend time with the family, right? And if you get stopped out, cool. You get ready for the next trade, right? If you win, cool. You are not this emotional person that's moving up and down. So again, set yourself up for success. Put money on the line, not too much, and have your expectations real and keep it nice and simple. The important part is trading is like boxing. And the crazy thing is it's not actually the market, it's yourself that's the big opponent. But there's an external factor, there's the market. The market has news and volatility. End of the day, you're in a boxing fight. When you are in charge, you can throw punches and get more aggressive. What does that mean? Your trades are starting to get ahead, stop loss is at break even, so you can start to get a bit more aggressive. But what happens when the market gives you a shot and you take your first loss for the day? What's the worst thing a boxer can do when they get hit? Is to go crazy, because that stands a chance where they're already dozed and you can get knocked out. And that's what the market aims for. The market aims to doze you and then knock you out. So what you want to do is step back, defend, get your senses back. Once your senses are back, you start throwing punches again. And that's the important thing. So protection is the most important. And when you are ahead, then you can get a little bit more aggressive. But knowing the difference between when getting aggressive and defending is a vital key. Step number 4 is your environment. Now guys, there's 2 different categories here. The one is those you are learning from. So the important thing is to be a part of a community, maybe watching YouTubes, someone that you're really in the game with, learning from. Again, they show their trades, they show their wins and losses, they show their emotions. because there's two ways you're going to learn. You're going to learn on their successes, but you're also going to learn on their losses too. The key thing you're doing here is you're not looking to copy. You're ultimately looking to, yes, agree on the analysis and take some trades, no problem, but ultimately they're going to lose in front of you too. And that's a lesson that they just paid for that you can put into your book and make yourself better. So the one category is, who are the mentors that I'm looking up to? Keep it clean, keep it small, and lock in with those people. Then on the other side, is there anyone that's doing this with you? Sometimes we have friends and family that do it with us. Now the important part here is make sure that they are as locked in as you. You don't want distractions. You want this community or this environment that you have where you guys want to make it happen. And this is so important because when I started my journey, when I lost that entire $40,000, it broke my heart. But I met a bunch of people that lost all their money too. Some guys lost hundreds of Bitcoin, right? Which is valued at so much money today. My mom lost all of her money. She's someone that I traded with in that time. But there was around 5 of us, and we sat up every single night and we joined communities and we listened to them. But then after, we sat by ourselves and we traded together. And when the markets were going up and down, we were there to be there for each other. And if my trade was going south and I was sleeping, my friend would phone me, right? And this helped so much because it helped me get out of bed. It helped me get through the really hard days. But the important thing is they need to be just as locked in as you. Otherwise, it becomes a distraction. One thing that made me very successful, guys, is I went quiet. I only locked into those that I saw that really wanted it with me. And when I went quiet and I removed all of the distractions, because the more we tell people things, the more they kind of have opinions and they start to mess with your dream a little bit. And when they mess with the dream, then you start to doubt things. The moment I got rid of all of that, 1 year later, I was a dollar millionaire. Guys, it's one of the most powerful things ever. So make sure your environment is correct. You have people that are doing it with you, that are possibly on the ground with you, and you have a really solid mentor as well as a good community. And remember, the key with a community is to find a community that's a lot smarter than you. That's how you learn a lot quicker. Step number 5 is the wealth trap. This one is something that I only discovered later on in the journey. Trading is a tool to make money. Does not mean that it's long-term wealth. And this one's super important. In my journey, I started with a couple $100s and I got to $1 million. And from $1 million, I got to a couple multi-million dollars. And yes, it was nice to make a couple $1 million, but you know what I did though? I put it all back into the markets. There was a few dates that I won't forget. The one is a lunar crash. I lost $2 million in 24 hours. The other big date for me was the 10th of October 2025, one of the largest altcoin crashes we've ever seen. I lost up to $2.7 million in about 2 to 3 hours. And the crazy thing is I worked my entire journey to build all this wealth, and I lost nearly up to $5 million in literally a short period of time. And it taught me something massive, is that there's a difference between a money-making tool and preserving your cash and building long-term wealth, which means diversification is the most important. If you're gonna keep putting money back on the line and compounding and compounding and compounding, one big loss is gonna take you back a very long time. And I'm saying this to save you guys from that because I've gone through that journey and it really, really, really hurts. Some will have to go through those journeys and, to be honest, not merely make it out. Many people quit when that happens, and sometimes it makes you on the journey. But if you want to be really smart and start your journey off nice and strong, you listen to those who've gotten their butts whipped multiple times. So diversification is the key. So let's go through a couple of examples of this. The first one is when you're investing, you need to have an idea of the risk category. Sometimes you buy tokens, you have a stop loss in, and whatever goes wrong, you've calculated your risk, and that's cool. Then what you have is things like your leverage positions, which is more money from the exchange, and you have this risk of liquidations. So if things go wrong and something happens to your stop loss, you don't have a stop loss at all, you can lose all your money. So the key here is, okay, I have $10,000. I'm gonna put $2,000 into long term. I don't care what happens to that money right now. That's to make me money in 10 years. Set and forget, and every month I'll buy $500. No problem. Then you have spot trades where it's like, okay, out of that 10K, I'm gonna put 5,000 into spot and I'm risking 3 to 4% per trade. So every trade that goes wrong, I've calculated my risk, I have a good risk to reward, and when the wins happen, they're worth a lot more than my losses. Then the rest of the money, $1,000 or $500, I'll put into leverage. Then the other 500 I'll put into bots. So the key here is when you're starting to deploy capital is to split it up, right? And have a strategy on each of them. It's super important. So if something blows up there, don't hit the entire pie. It's just that little pie, and you've got to fix that pie and get that back to where it needs to be. Then you get to the next part when you're making money, when your thesis is actually succeeding, diversification. So what I should have done is with those millions, I should have put some into the stock market, right? The Dow Jones. I should have put some into cash. I should have put some into gold. I should have put some into silver. I should have split the money around, right? I could have bought 1 or 2 properties. I did none of this. I put it all back into the market. So have a good splitting system. So when you make profits, you say, okay, 10% of it or 20%, I'm going to keep in the account so I have a little bit more to trade with next time. Other 20%, I'm going to think about 10-year future me, and I'm going to buy 20% of those coins, and I'm going to leave that for the next 10 years. The other 5%, I'm going to put a little bit more into my leverage account. And the other 50%, I'm going to go buy assets outside of the market, things that are a little bit more safe. So the key here is to have respect for yourself later. Stop thinking like this. Stop thinking short term. What's going to make you feel fulfilled now? Think about the rainy days in the future. Think about the red days and what is going to protect me in the long run. Again, the key metric to success is to make sure you know how to limit your downside more than your upside. Upside comes naturally once you've learned to master downside. And why it's also so important to have this risk aspect of learning how to protect yourself is you're able to take advantage of big opportunities in the future. That big crash, both of them, that wiped me, specifically the one in October, was actually a huge opportunity. Imagine I had $2 million to buy that dip when the altcoins dropped 70% in 1 or 2 hours. I would have made a lot of money. And that's the key here. By preserving and thinking about your future self gives you the ability to take advantage of opportunities, because a disaster is actually an opportunity, but we just never have enough money to take advantage of that opportunity. And that just means when the good times are rolling, think about that and prepare for that. That's what gets you ahead of the game. So now that we've spoken around protection and diversification of money, let's talk about the next thing to consistently keep that in check. So let's jump on to step number 6. And this is the system and the journal. For me, this is very important. This is like the navigation of your trading journey. You've started the journey now, you've jumped into the vehicle, you're moving, but you need something to track where you're going, so you don't go off track somewhere very far and then realize that you basically lost, right? You want something to kind of bring you back in check. So what you need is a really good monitoring system. So I want you to be honest with me right now. If you look at the last 10 trades you have taken, how did they go and why did they go the way they did? Do you understand your wins and your losses? This is very important. Otherwise, you're driving on the road and you are completely blind. And answers like, oh, Trump said this or the market moved against me is not the key answer here. The key is, what did you do right and what did you do wrong? What is your specific reason? Because end of the day, you are in control of yourself. It's not about being a 10 out of 10 trader. If you get it wrong, gives you another opportunity. But what went wrong? What could you have done better? And if not, what was your successes? And by being able to track this information, you will see if you're going against your rules or you're listening to your rules. And that's the important part. Are you listening to the navigation or are you not? Or you're just guessing which road you're going to go down? My whole journey changed when I stopped thinking this was a science. I simplified the process and I realized that I'm the problem. Take responsibility. Does not matter what news or what happened. Yes, there's big crashes and there's big pumps that happen, but I was the one that made most of the mistakes. The market many times gave me a lot of money. Thank you, markets. But then a lot of times I gave it back to the market. That was my fault. And that's a very important thing for you to take responsibility for. So the way you basically look at this and what changed my journey was me actually having a navigation. So when I took trades, specifically when I was day trading or trading quite often, the key was just monitor down what coin was I trading, why did I buy it, do I have 3 to 4 reasons why the trade is worth it, is there a good risk to reward, and what was the result? And out of 10, I would get my result, 3 out of 10, 7 out of 10. But the most important part was the reason, right? Because again, sometimes a loss is a success. If you bought somewhere and you got stopped out at a minus 3% loss, but the chart or the coin kept dropping another 20%, that's a successful stop loss because the market was dropping so much more and you protected your capital. But if it took 3% and then went up again, that was a fail. And the more that I kind of understood, was it a success or was it a fail, the more I could kind of see what did I do wrong. Oh, maybe I'm putting my stop loss under a certain tool and 3 of my losses in a row were all because I chose the exact same area to put them. And the moment that I use another tool, all of a sudden I get 1 loss instead of 3 losses. So what we tend to do is we tend to to repeat mistakes. And this is our biggest nemesis in the market, is the market is so good at getting us in our own heads and creates repetition. So by you having the navigation, you will clearly see where you're repeating things. Now, it's not just weaknesses that it repeats, because you will see, oh, I keep doing this, the same mistake all the time, and this is how much it's costing me every time. It's also successes. That's so important to know when you won. Not just celebrate the win and say, oh, I won. Why did you win? How did you win? How can you do more of that in the future? So a trading journal is a very simple way that you can track your journey, as well as constantly monitoring where you're going right, where you're going wrong, so that you can jump back to your system that's designed for you and you can keep tweaking the system. Now, why is this important? Because every day, every week, at any moment, the market changes trends. Sometimes it's going down, sometimes going sideways, sometimes it's going up. So by having the trading journal moving, when the market changes structure, is the same system you were using 2 weeks ago still good in this current market? Sometimes it's not, but sometimes it's 1 or 2 little tweaks and you're back on track again with making money. So when the markets change trend, it's very important for you to know if your software is still in the correct place for the market. And I'm not going to sit here and say, always use a trading journal. There's many times that I have not used a trading journal. But when I go down a bad streak, or I start to lose my trades, or things go against me, the first thing I do is bring out a trading journal. So think of it as this wave. If you're driving on a road, you kind of know where you're at. Cool. Turn the navigation off to save the battery. But at any point, you feel like you're lost. Instead of going far down the route to realize you're lost, put the navigation on, refocus yourself, find the problem, find where you are, get back on track, cool. Then you can turn it off. If you can stay consistent and keep it on, that is rule number 1. But if not, it's a system that is there for you at any point to go see where you've gone wrong. That's the very important part with trading. You. So just to jump back and clarify, you don't have to sit and go and examine your trading journal every day. Make 1 day a week, maybe a Sunday, maybe it's once a month, all depending on your journey, how often you're trading. Examine that data. All you have to do is every day or every few days, just fill in all the trades that you took. You can go to your exchange, you can see your transaction history, and just make sure you fill that data out once a week. It can be once a month, okay? And ultimately, you can reflect on that journey. And just that little hour, once a week or once a month, you're doing the real work, which is evaluating yourself and looking at where can you improve. Therefore, the next week, when you're gonna go watch a YouTuber, or you're gonna go do a course, you know exactly the topic you're gonna go study, because your trading journal has highlighted where you're weak or where you are strong. That is where you must focus. No more wasting time. Start putting that brain and that focus into things that really matter, which means you need to read the data, and the data will make it quite obvious on where you need to put your focus at next. So the journal is your navigation to your trading. But now let's speak about the next strategy. And the next strategy goes against everything that your thoughts and your brain goes against. And this is number 7, the reactive strategy. Guys, most people that lose in this market are those that are basically trying to predict the market. This is something that we all want to do. We all want to know exactly where the market's going to move next. And I'm someone that's very much gone through this, and I've gone through many years of this. And the more that I've realized that unless you are super in tune with the market, right? Because sometimes you'll be in tune with the market and you must ride that, then yes, predictions are working, but it was never sustainable in my journey. So this prediction strategies that you use may work certain periods of time, but over a long period of your journey, they don't actually really work. So what you really want to work on is a non-prediction strategy. And the reason for this is you don't want to be filled with all of this noise, because if you take into account what you think, what is the government going to say, what's going to happen on the news this afternoon, you're going to fill your brain with so many different scenarios that when it comes to taking the actual trades, you're not going to have any confidence. You're going to double think everything. Confidence is the most important thing. It's to know that you're not afraid of losses and you're not afraid of wins either. You trust your system, because you know that if the trade goes against you, it's going to go very against you, and it's going to give you a new opportunity tomorrow, right? It's not this thing of like, oh, I'm afraid to lose. So how you do that is you need to remove the opinions, remove the ego, and remove the thoughts. That's why technical analysis for me was so important, because ideally what it was information on a chart. And if something broke a level, it went down. If something broke a level, it went up. As much as I thought something else could happen, right? The chart gave me the information before it actually happened. And what that that did over time created me a sustainable strategy. So the key here is to have a non-prediction strategy. So now I want to go through a quick example of a trade I took a couple of days back. And I just want to show an example of a non-prediction strategy. And then I want to teach you guys my actual formula and go through the different processes and simple systems that I use. Okay, so again, I use one of my tools that I use is trend lines. Trend lines help me a lot with not predicting, just telling me when the market is changing trend and when we have a good risk to reward ratio. So here was the trend. As we broke the trend and retested, I bought the buy over there, right? You can see the arrow of where I got in. Then all I did was as it was running up and as it started to speed up, I put a bottom trend line. And the moment that we broke the bottom trend, I took profits. So just to show you guys over here, if I pop this in here, my stop loss will go under this low, okay? And that's the risk to reward. So remember what I spoke about, the 1 to 5. So here was a 1 to 5 risk to reward ratio, which means that 5 of my losses is equal to 1 win, okay? But without me predicting or anything like that, I bought the breakout, I put the bottom trend as it was speeding up, and the moment that it started losing the trends and it confirmed with a retest, I got out of the trade. So this is just one simple tool, just to show you that there are tools out there that just help you move with the market instead of predicting the market. So let's go through my processes now and go through a couple of steps for me when I'm looking to take a trade and what are the basic tools that I use. So here is a chart right now. So again, the first thing I want to explain is let's go through a couple of tools. One of the main tools that I use is a trend line. A trend line helps me identify when trends are changing, but secondly, it tells me when trades are actually ready. The next one is support and resistance. So when we're looking to break a trend, we would have bounced or we would have rejected, right? So if we break a trend to the downside, we would have rejected at a resistance. Or if we bounced and break a trend to the upside, we would have bounced at a support. But I need to make sure that it has bounced as a support for me to really trust the trend line break. Because just because the trend is breaking doesn't mean it's 100% always going to be accurate. So what I'm looking for is multiple things to help me justify that it's a real breakout. Then the third one is quite simple. This is the market psychology. I need to make sure that the market is emotionally ready for the actual move to happen, which gets me to the fourth point, which is time frames. These are very important. So let's go through the start. The starting point is a trend line. So trend lines, what you're looking for is to find if you want to long, you want to obviously see that the market has been coming down for a certain period and you want to track that down. Now it can be down, it can be slightly down. You're looking for the trend, right? So just track, because all that it's doing is lower highs and lower lows each time. That's what it's doing. What am I looking for? I'm looking for the first higher high, because a higher high can mean higher low and trends can start to move. So I'm looking for that point over there. So the key with trend lines is when you're looking for a good trend, because you can draw so many trend lines, right, is which one has the most touches? Which one is the stronger trend? So if it's 2 touch, it's an average trend, right? If it's a 3 touch, it's a decent trend. If it's a 4 touch, it's a good trend, right? If it's a 5 touch and plus, it's a great trend, giving you a high probability of it being correct. So the first thing I look at now, if I look at this token Solana, look at a good trend line. And if I look at that trend, I see 1, 2, 3, 4 touch trend line. Again, some will say bodies and wicks. I find as many touches as possible, maybe bodies and wicks, right? So there's the trend. The next thing that's important with the trend line is the trade ready to trade right now? No, it's not. Why is it not? Because look how we still have space to the trend line. So if I'm someone that wakes up in the morning and I want to take the trade today, right, I want to see us close to the trend line. And if not, go work for a couple of hours. And once it does this and gets to the trend and then wants to break, that's when you trade. Why is this so important? So you don't get into a trade too early. What happens if you try to get in over here, right? You would have got stopped out, right? You've got in here, stopped out. Why? These were 2 touch trend lines. Firstly, not strong. Secondly, we weren't ready, right? So for me, when we find the stronger trends, they're the real trends. But secondly, that is the time. Put an alarm on that trend line. Give it some time. When it's ready and breaks the trend, then the trade's ready. Let's get to support and resistance. You want to look at previous lows, right? Because we tend to bounce on previous areas we've bounced before. We tend to reject on previous areas we've rejected. Now, I'm not looking to buy that. I just want to see that if in the next few hours we drop here, we bounce, and then we break the trend, did it bounce on support? Is it a real area where it can bounce? If so, that's a green tick. Amazing. But what happens not? Maybe it wants to do this. My key is not to catch this, guys. This is predicting again that it's going to bounce there. The key is let it shake out, let it settle. When it breaks this trend, then I'm looking for a strong entry. Then the next one is the psychology, and I want to bring up this over here. It's called the Wall Street cheat sheet, and this is emotions, right? Now emotions are very important because you need to identify where emotionally could we possibly be. Now, this doesn't have to be thought of too strongly, but what we want to see is when a token has dropped, you want to see it slow down for a reversal, right? Slow down is something like this area over here, which is depression, right? It's anger. The key is not to buy anger, the key is to catch depression. So if I see something slowing down like this, it gives me a good idea that we're at depression at the bottom, and that's a key zone for me to put a trend at the top and catch it when it's done with depression. Because after depression, we go into the more green emotions. We go into disbelief, we go into hope, okay? And that is where I want to be in the trade already, because that's when price goes slowly and then speeds up. And it's the same to the downside. If I'm looking to short, I want to see a token going up and slowing down. And that for me is the key short point over there, right? So emotionally, it's always important for you to pay attention to the slowdown. Slowdown for me means two things. Either it means it's going to continue, okay? So what does that mean? We come down here and we break down. But Sheldon, we just spoke about depression. What happens if we're not in depression? What happens if we're a little bit high up and we're still in this panic area, right? We're about to go into the next zone. So why we don't pre-jump trades too early is in case you're catching it in the wrong emotional state. Maybe it's another leg down. So by me having the bottom trend here would give me a key point of when to possibly short this token. But I missed the short. So for now, I put this in and I wait for the depression area to start to break. Let it do what it needs to do. Let me not waste any money. When it breaks that, that's where I'm paying attention to, which then gets me to the time frames. Guys, time frames are simple. Each candle takes as long as the time frame that you've chosen. So if it's a 15 minutes, each candle's a 15 minutes, which means that the certain amount of data that you're looking at is for the period of trading that you want to do. So if it's something where it's a sense of, I want to trade for the next 4 hours, a 1 hour or 15-minute time frame is perfect because it's giving you data what can happen over the next few hours. Not what's going to happen next week, not what's going to happen next month. Should I long, should I short? Use the right time frame. If I want to trade over the next 7 days, I use a 4-hour time frame. If I want to trade the next 60 days, I use the daily. If I want to trade the next 6 months, I use the monthly. But I use the same tools, trend lines, support and resistance, and then, one more, risk to reward. So just to go back over here to this trade that I want to speak about. Okay, so let's zoom in here. Let's find the trade. Cool, so let's put this trend line in just as an example. So again, once this bounces on any support, and let's say decides to break the trend, why I love trend lines is they give really good risk to rewards. So there's the stop loss right under the low, because if we're breaking out, we should be making higher lows. So there's the stop loss. And I always put the take profit mid-range of what it dropped before. Again, I'll do more videos in the future on technical analysis to help you guys with that. But good risk to reward. Your risk is so little, right? Your reward's very big. If it goes back to the top, look at that, a 1, 2, 7. So again, for me, it's quite simple. 2 or 3 super simple tools, keeps my risk to reward in check, keeps my strategies nice and simple, and helps me identify when is the right time to actually be taking the trade and not entering the trades too early. So guys, the basic technical analysis, the trading journal, the rule systems, all these things are all there as fundamentals for the long-term view. And that's what I want to speak about next. So number 8, the long game. This is very important. You need to understand that you are learning a skill that you're going to have for the rest of your life. So don't shortcut that skill. We spoke about it a little bit earlier, that if you need to make money, be around those that are making money. It will help you with that process quicker. But when it comes to your journey of learning the skill, it's important for you to not rush that. You are building something that is specifically designed for you. And that's why it's important to not distract yourself with too much noise, okay? But ultimately focus on being in the game, building systems for yourself, things that work with your strengths, learn how to keep your emotions balanced. And again, that comes with trading and staying alive. Every time you take a loss, it's a lesson. And remember, you are in charge of how much you're gonna pay per lesson. There are going to be bad periods. There's gonna be times where you're not gonna make money for weeks and months, right? There are times where that happens. And then there's gonna be times where your life can change like this. Again, I'm someone that my life changed after a bit of grind. It pushed me. It made me want to quit many times. But when I got through that barrier, it became the most powerful tool that I have. Anywhere in the world, you take your laptop and you can trade. Bring your money with you too. You can trade all different types of markets, not just crypto, right? Anything, which means you can move at any point. You're learning a money skill and you're learning something that no one can take away from you. You are now your financial advisor after this journey, right? That's what you're building to become. You don't have to ask anyone how to protect your money and how to make money. You are going to know how to do that. But it's important that right now you make your expectations that it's the long-term game. And if you want to get good at it quickly, shortcut it and make it very much about yourself. Stop chasing what everyone else is doing. Build something that works for you. Super important. So let's go through a couple of very key steps. So if you need to make money, work really hard on taking a small amount of money and good short-term strategies. And work on ways of taking profits very often. Profits and taking breaks. If you take a loss or two, take a break. If you win one or two, take a break. But look to take as much money off the table as possible. In the background, look at good investment opportunities. And what this means is you just buying, let's say Bitcoin as an example, and loading up a little bit of your portfolio and every month buying a little bit of Bitcoin and just accumulating that for the long term, right? Buying some one or two good stocks while you're learning the skill. This money can grow, but make sure it's the blue chip assets in the world. If it's a crypto aspect, get the blue chip, right? If the stock markets, get the blue chips. If it's anywhere commodities, get the blue chips, right? But build that slowly. And as you start learning the progress and start learning the trading sequence, you can start making some longer term investments. Then when it comes to your actual trading, I want you to judge your losses more than your wins. Winning is actually very easy. I want you to really take your risk category seriously. Get better at losing less every time. Get better at knowing why you lost. Get better at making those changes and adjusting your rules. Simplify everything, cut the noise, and stick to your system. If you see you're going through bad routes, work on the system. Don't go to someone else to save you. Keep fixing and adjusting the system. Remember, long-term success doesn't come from the perfect strategy. It comes from getting through the hard periods, not quitting, pushing through them, and keep learning and keep growing. And once you get through the threshold, you get to this point of super confidence and you learn that every disaster is an opportunity, right? And you actually have money to be a part of that. And that's when you start to see the life-changing opportunities. The $2 million that I lost, it's actually more, $4 million that I lost, was not just losses. Guys, it was a part of my journey. I realized that I could make a lot of money and it was incredible to see, but it hurt really bad when I gave it back. But it made me learn about those lessons. And the big thing for me is I know how to make money again. And the important thing now is how do I lose less the next time? And that's why I'm dropping this video for you guys right now. Is the important thing of you can achieve anything, but always pay attention to the blind spots. And that's something that throughout my journey here, it's been hard to swallow at times. It really hurts. And that's why when I lost these big amounts, sometimes I took a month to 2 months off, okay? But the important thing is I got back on. And I want to share this with you now. My journey is starting to go back up again, right? And it starts to rally up. I'm still sitting 10,000 times more than what I was a couple of years back, right? I've still made really, really, really good money. But when it comes to the loss aspect, I'm on my journey back and I'm there to make higher highs and get to the next major areas and get to the next major goals. My goal, I'm a 29-year-old, I want to get to $110 million. That's my goal. But in order to do that, imagine getting to 110 and then losing 80 of it, right? It's for me to go through the hurdles and go through the routes of becoming a trader. But by watching this and applying what I've spoken about today, you can take way less hits than me, right? And your journey can be a lot more smoother than mine. So again, I want to welcome you to trading. I wish you the biggest success ever. Join the fam. If you are looking for a community, I do have one for you. There's a link below in the description. Subscribe to the channel, like the video if you found that there was value in this and that you learned something. I wish you guys the best. Thank you for watching. Have a great day.